What a terrible day, or maybe rather, what a terrible week. Actually, it's not just the week, it's also the month. Pretty much everything went down in the last month. The question is, where is the bottom? When does it make sense to buy? Let's have a look at some data most people aren't considering. In the last week, every single crypto category except the stable coins went down, and they went down to different degrees, but it was pretty much impossible to make money in the last few days. It doesn't matter how much you're concentrated in your bets. It doesn't matter where you deploy your money in crypto. You are definitely down, so am I. Now, this is a matter of the altcoins performing worse than Bitcoin or Ethereum. What we've got over here is the others dominance. So how much of all of crypto is in the altcoins that are not in the top 10? And this tends to oscillate, and this tends to increase slightly over time with increased altcoin adoption. And this chart starts in 2014. And so what happened in the last few days is simply a drop in the importance of altcoins by 16%. Bitcoin already didn't do that well, but the altcoins did much worse. And so a very simple approach to determine where the potential bottom could be is just looking at the historical trading range. That does not mean that the altcoins have to go up in US dollars, but maybe after the altcoins underperformed for another 13% or so, we at least don't see more pain in alts relative to the rest. Because if things unexpectedly suddenly turn around again, the upside for the alts is of course quite large, more than 100%, again relative to the rest of crypto. Now 100% outperformance can mean all kinds of things, right? It can mean that Bitcoin goes up and the altcoins go up even more. It can mean that Bitcoin falls by 50% and the altcoins don't fall at all. It doesn't necessarily mean that US dollar gains are made. It simply means that the risk to reward at those low prices for the alts might be better compared to buying plain old BTC. But then the big question is, what will Bitcoin actually do? Now, I believe that so far we haven't yet seen the bear market starting. We are at elevated prices and momentum is cooling down, but we haven't yet turned. And the reason why I say this is because this green squiggly line is above this smooth turquoise line. Now, the green squiggly line is obviously the Bitcoin price. The smooth line in turquoise is the 120-day simple moving average. And I have run a backtest, and I will talk about this again in this video, how buying Bitcoin whenever the price is above the 120-day simple moving average tends to be a good strategy, and selling Bitcoin or even shorting Bitcoin, as in betting on falling prices of Bitcoin when the price is below the 120-day simple moving average, can also be a profitable approach. Here is that backtest. It starts with data in August of 2017. So that's roughly 2 cycles or 8 years of data. And I've backtested the best moving average when we include trading fees of 0.2%. And again, we buy whenever we are above and we bet on falling prices whenever we are below. And when we do that backtest, when we try to find out what's the best moving average from the 2-day all the way to the 200-day, we find out that the 120-day simple moving average historically worked the best. Now, buying and holding during the same time period would have given us 28%. Using this strategy to trade Bitcoin would have given us 127%. And that is annualized. That's every single year. So that's more than a doubling every single year for 8 years. Here's the result again summarized. So on the x-axis, we've got the duration of the moving average. On the y-axis, we've got the annualized performance. In black is, as a reference point, buying and holding. And again, the 120-day tends to work very well. The 110 or the 130-day moving average also works. So it's not really that important that we nail the exact right moving average. But in general, what we can say is that most moving averages are better than just buying and holding. Going too long on the duration isn't really good because then we are not reactive enough with the price. Going too short with the moving average is also not good because then the trading fees eat up all potential alpha. So once we are above 30 days, we tend to outperform just buying and holding. So the trend is your friend with Bitcoin. And so that's then how that looks like over time, right? This is the Bitcoin price during the backtest period. And over here, we've got how a trading portfolio with the moving average trading strategy would have performed. Much, much better, of course. This is on a linear scale. And over here, we've got the same on a logarithmic scale. So very nice constant outperformance. We can see that when the price is going down, we also tend to go down much less. So not only are we outperforming, we also have less volatility, we have less drawdowns over time. And again, we are shorting when the price is below the moving average as well, right? That's why we see the portfolio shooting up here while the price is going down. This is when we bet on falling prices. And so that's why I'm saying that I don't think we are already in a bear market, right? According to that moving average, we should still be betting on rising prices. The 120-day SMA currently is at 81,600. We can still digest a drop of up to 12%. Once we hit 13 and 14%, we might close a day below, and that then means that we should be betting on falling prices. Test. Now the back test assumes that we are betting both on rising and on falling prices, and most people are probably not going to bet on falling Bitcoin prices long term. So let's isolate the two strategies. How much performance would we get compared to buying and holding if we only bet on rising prices and then we get into cash whenever the price falls below the moving average? And how much performance would we get compared to buying and holding if we never bet on rising Bitcoin prices because we are the perma bears and we only bet on falling prices? So let's split the long and the short strategy. Let's not combine this in one chart. We can do this with the back test as well. So let's remove all the shorting. Let's only get into cash. And that's then how that looks like. So there are periods in time where we simply go sideways, where we don't do anything with our money. And there are periods in time where we follow the Bitcoin price. And again, of course, we've got way less severe bear markets, but at the same time, we profit from the bull markets. And that then causes this long-term nice outperformance. But of course, net, there is less outperformance compared to doing both strategies because shorting in itself also is a nice strategy. But still, over the course of those 7 years, following the 120-day simple moving average would still give us 6 times more performance compared to just hodling. Let's do the exact opposite. Let's only short. Let's only bet on falling prices. That's then how that looks like. The performance is very, very similar to just buying and holding. We still slightly outperform buying and holding, but I find this fascinating. The data sample starts at a point in time where Bitcoin was just at $4,000. And even though we can never go long in the Bitcoin price, even though we never bet on rising prices, we are only allowed to bet on falling prices. Even though we've got that massive of a restriction with an asset again that rises massively during the time period, the shorting strategy has been able to match the performance of buying and holding. And again, with less volatility compared to buying and holding. So clearly, in both directions, there is a trend effect in Bitcoin. When Bitcoin used to go up, it's likely going to continue to go up. When Bitcoin used to go down, it's likely going to continue to go down. But again, the time period is important here, right? It's the 120-day or the 4-month moving average that used to work the best. This is normally the duration in time that it requires for the trend to actually make a turnaround. And since we had been that bullish in the last few months, we still should stay bullish to a degree, but not forever, right? There's a limit to everything. And maybe buying has exhausted for a while. The last month was definitely not that reassuring. But then comes the question, right? Let's say that Bitcoin really is currently very high. And let's work with the scenario that we're actually going to fall below the 120-day simple moving average. What's the best safe asset to get into? Because since Bitcoin is a risk-on asset, at least the price behaves in this way, it's probably not that wise to buy Nvidia stock or to buy the Nasdaq 100 in general. It probably makes more sense to buy something that goes up during times of crisis, because now there's also more correlation between Bitcoin and the tech stocks, right? Tech stocks tend to move now in similar directions to Bitcoin. And so there are many answers to that question. I personally think that this here is the most straightforward answer. This is the gold price relative to Bitcoin. And this line over here at the bottom is no science. It's just a curved line. It's just drawn to connect those bottoms. But again, it's interesting how they connect, right? It's interesting how closely gold tends to move in cycles versus Bitcoin. And the last time when we bottomed, we first saw a smaller rally that was around 100%. Then we saw a secondary rally that was around 300%. And currently we are again quite low. Who knows if this will be 100% or 200%, or 300%. I don't have a crystal ball. I don't even know if gold will outperform Bitcoin in the near future, right? It's simply just interesting to look at those relative valuation charts. The best time to buy gold or even to short Bitcoin is probably when we go below that 120-day SMA. Now, there's two ways how to get updated about this. The first way is to simply just subscribe over here, right? Because I publish videos on this channel regularly. If you don't want to subscribe because you didn't get any value out of this video, then here is your alternative. You go to tradingview.com and you enter BTC USD as a symbol search, right? So a symbol search is here in the top left. You simply enter BTC USD. Once you've done that, you press / on your keyboard. With / you will see this pop up coming. You then search for moving average. You click on moving average simple. And once you've done this, you will see this faint blue line in the background. Double click on that line and change the length of the moving average. So in our case, to 120. Now, once you've done this, go to style, and now you can change also the styling to say a yellow line or a blue line or whatever it is, right? You can change the color and the thickness over here. And once you're happy with your color, you can monitor this by yourself. You can simply then add this to your favorites and revert back to this. Now, this back test assumes that we only trade once per day, right? We look at the day end prices. We're not trading within the day. We don't set any stop losses. We're just looking at midnight UTC prices. So we are ignoring what happens in between, right? We're ignoring outliers like over here, where we would have maybe sold and then bought back in again. We're just looking at the price once per day at midnight UTC. And yes, there are ways to optimize the strategy further. There's ways to add potentially some leverage to this. I'm not talking about 10 or 20x leverage, but maybe 1.3, 1.5x leverage, depending on what the broader picture looks like, right? When Bitcoin, for example, is below the realized price, and then suddenly we go above the 120-day SMA, it might make sense to put in more positive leverage compared to currently, right? The market in aggregate is already quite a bit in profit. And so any rally that we see from here is probably not going to be a 5x rally. The 5x rallies happen when Bitcoin is already depressed. That's when you want to get in with leverage. You don't necessarily want to get in with too much leverage when there hasn't been any kind of depression beforehand. And what we've seen so far is far away from a depression, right? It's simply just the market cooling off. Now, the content of this video is somewhat of an excerpt what I do in the premium membership here. So there's a tutorial section on technical analysis, and over here are several videos on how to use TradingView, on how to plot moving averages, on how to plot relative valuation charts, different indicators, how to optimize the indicators, etc. There are over 100 tutorial videos in total in premium. So feel free to check it out. If you've got a portfolio that's not just a few $100, but that's in the tens of thousands of dollars, maybe hundreds of thousands of dollars, then this might be worth it for you. Because again, there are strategies like trend following strategies that can outperform just buying and holding Bitcoin. I don't think it's just a complete coincidence that pretty much all of the moving averages for Bitcoin that aren't too short or aren't too long outperform just holding. So there are ways to do better than the average. Now, besides the tutorials, I also publish premium update videos every 3 to 4 days where I share my view on the market. And we've also got dedicated altcoin chats, which of course focus on data-driven approaches as well, such as on-chain analytics. It's currently $165 per month. There's also a 1-week money-back guarantee. So in case you don't like premium, just message me within the first week and I'll refund you 100%. There's really zero risk for you. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.